The Russian ruble seems largely oversold, so traders are waiting for a pullback on the dollar-ruble pair. Oil opened the day with a decline, but optimism still persists in the market. Oil can easily win back its morning losses, as it happened on Monday. The Russian ruble remains subdued and is rapidly losing ground amid a rapid coronavirus spread in the country. Investors are selling off the ruble as they fear that Russia may intervene in the conflict between Armenia and Azerbaijan. The ruble has been posting serious losses for the fourth session in a row, yet there are no signs of a pullback. Over the past few days, the ruble has lost 4% against the US dollar. On Monday, the Russian currency depreciated by more than 1%. Today, the ruble opened the trade in the negative territory as well. The ruble has shown a very steep drop, although the country sees no real threats to its economy. The risk of new sanctions against Russia over Navalny case does not seem to have a big impact either. At the moment, the Russian currency is oversold, so a pullback is possible at any time. Besides, traders have already priced in all the risks. The ruble is looking for support, which may well be provided by the market of federal loan bonds. In the morning session, the ruble fell by 1.1% against the US dollar. It closely approached the mark of 80, which now serves as a resistance level. There are two possible scenarios for the dollar-ruble pair. It may either enter a phase of correction, or it may reach record highs above 80 rubles per dollar. If the greenback fails to break through the resistance level and the price pulls back, the pair will need to test the level of 78. The next target for the pair can be found at the level of 76.50. In case this level is not tested, the US dollar will have a chance to assert its strength once again. Then another attempt of the price to break through the 80 mark may prove to be successful. Meanwhile, oil prices lost around 0.5% in the morning trade. In general, the situation in the energy market looks rather stable. Brent oil is trading near $42 per barrel, while WTI is holding above $40 per barrel. On Tuesday, the fall in oil prices was minor, and this means that any positive news may help recoup losses by the end of the session, just like yesterday. However, crude prices are unlikely to show any considerable growth. Thus, Brent will need some serious drivers to test the resistance at 43.50, including a noticeable drop in the US dollar index, and this scenario may become relevant by the end of the week. The dollar is waiting for new stimulus measures aimed at supporting the US economy. If the US lawmakers agree on a new relief package, or at least reach a compromise on this issue, the American currency will face a round of sell-offs. This factor will definitely support crude prices. Apart from the US dollar, there is another factor to raise concerns in the oil market. The increasing number of new coronavirus cases around the world dampens investor sentiment. Some countries have already reimposed the lockdown restrictions, which is sure to affect fuel demand and oil prices. Therefore, oil quotes will most likely show a moderate increase. That's all for now. Thank you for watching and stay tuned.